We're looking at a second strategy. Now, this one, I got to tell you, so many people don't really understand this one, how it works. Now, there was the reverse mortgage in the US. They had a really bad reverse mortgage in the years past. That tainted the industry on the reverse mortgage concept. So we're going to have Rosalie's going to help us understand it as it pertains to the Canadian marketplace. Um, and that'll be good. So the first question for Rosalie is the reverse mortgages have evolved significantly. How do you frame them in today's planning environment?
I really appreciate you touching on the US because I definitely think
Mm,
reverse mortgages have a bad rep here.
mm,
But I also think it's just very misunderstood in terms of how it works, especially in Canada.
yeah.
So in Canada, it's no longer just a last resort product.
Mm,
Typically, they're used to help with liquidity, aging in place, and retirement planning. And the
yeah.
key difference between reverse mortgages in Canada versus in the States is that in Canada, it's never going to be a negative equity in the sense of your reverse mortgage balance you'll never owe more than what your property is worth. And that was one of the biggest issues when it came to the States.
Yeah.
And then for those that are not familiar with a reverse mortgage,
Hmm.
a reverse mortgage essentially is a mortgage that's available only to those that are over the age of 55.
Yeah.
And the loan to value is geared based on your age and your location and the
Hmm.
property value of the home.
Yeah.
So with this kind of mortgage, you are not required to make monthly payments. You're essentially payment optional, and the interest accrues on the mortgage balance. And you have the option to either make no payments or make
Mm,
interest only payments, or you
hmm.
have the option as well to prepay. So it can be very flexible.
Yeah. And so the way it works here, so for someone, well, let me ask you the next question because you're probably going to answer it in the next question, and then if you don't, I'll ask it. And if I forget, it's not because I have dementia, but just I forgot, right? So the next question is when structured properly, okay, this reverse mortgage, when it's structured properly, how can a reverse mortgage support two things: income stability and peace of mind?
So this is important. The key is structured properly.
Mm, hmm.
With the reverse mortgage, you have two options. You can either have a lump sum, so they pay you out, let's say 300,000, that's what you take as deposit in your bank account.
Yeah.
The other option is for you to get a monthly income stream. So instead of them giving you a lump sum, they pay you out on a monthly basis. So typically, you'll see people, especially in retirement, use it to supplement their retirement income. So in addition to their pension, CPP, old age, they'll also get that monthly income stream coming from the mortgage.
Mm,
You'll
yeah.
also see people may use the lump sum method to be able to renovate the home for accessibility again,
Yeah.
consolidate debt, as well
Hmm.
as avoiding a forced sale. I've seen reverse mortgages help seniors stay in their homes that they deeply wanted to remain in, but we're
Hmm.
just not in a financial position to be able to afford the additional costs happening in their life.
Yeah.
So they've been able to use a reverse mortgage to help supplement their income and pay out any like consumer proposals or anything of that nature.
Yeah. So how should seniors and their families think about reverse mortgage in the context of estate planning? So I do a lot of estate planning, and I know you're involved from the mortgage perspective to do strategy on the estate planning side. So help us understand that.
So, when it comes to estate planning and getting the family involved, I think it's very important to have family involved just to kind of get everything out in the open.
Hmm.
And it will help reducing surprises and conflict later. And I find with certain mortgage methods, it allows a senior to preserve their independence. It allows
Hmm.
them to preserve their dignity and decision making control because you want to be
Yeah.
in a position of power, not pressure. As a
Yeah.
senior, that's what I always say.
That's right.
Yeah, and I've also seen Aside from, there's many methods. So a lot of people have used this to support themselves so they're not reliant on their children.
Hmm.
On the flip side, I've also seen people use this as an option for early inheritance.
Hmm.
So instead of waiting till after they pass, they just take out a lump sum up front, pass that on to their children or grandchildren,
Hmm.
and then now they can focus on, in their later years, just focus on themselves, maintaining their lifestyle, maintaining their health, and getting by on their own.
Yeah, that's good. So I would say like on this reverse mortgage. So if you're in a situation, you're a bit of a pickle, you're not sure what to do. One thing that'll help you think it through is set up an appointment with Rosa-Lee just on the over the Zoom like this, and allow her to ask you a number of questions, like open-ended questions, so that you can think and reason and understand if it's a good fit or not. And then when we're dealing with seniors, sometimes it's good, to have one of your kids on the call with you so that when you get off the call, you can talk it through. They can ask additional questions. But Rose is really good at helping you think it through. So her contact information is underneath, and I think that's a good idea to do that. I have one more reverse mortgage question for you, Rosa. So
All right.
I had I've had several clients over time when the topic of reverse mortgage comes up, they're afraid that the bank who does the reverse mortgage is going to take the home away from them because it keeps payments. If they don't make any payments, all of a sudden we're in trouble. Uh, you've addressed it a bit but you can kind of talk about that again. What would you say to someone who's fearful in that regard?
I would definitely reassure them that that's not how reverse mortgages work in Canada. So when you get a reverse mortgage in Canada, your property is your property.
Yeah,
The
yeah,
only thing that you are responsible for when it comes to a reverse mortgage is making sure that your property taxes are paid up to date. That is it.
yeah.
They don't
Very
require
good.
anything else from you aside from maintaining your property tax in good standing. And then in terms of your mortgage payments, again, it's completely optional. You are not required to make a
Yeah,
mortgage payment. However, for those that are concerned about that or are concerned about that growing mortgage balance,
yeah.
I always let them know that you always have the option to make an interest only payment. So let's say you took out a
Mhm.
$300,000 loan on your property. If you
Mhm.
make that interest only payment, your balance stays at that $300,000
Yeah,
balance, right? So that will give you that peace of mind where you're still maintaining your equity in your property. You're not worried about, that pressure of having to make a monthly payment. But if you do make the monthly payment, you're also
mm,
reducing that balance. And a key difference between your traditional mortgage and your reverse mortgage is that, let's say for whatever reason you were unable to make a payment this month,
yeah,
like your interest only payment in regards to your reverse mortgage, there's no
mhm,
consequence. You're not going to get
yeah.
a letter in the mail saying, hey, we're going to proceed with the power of sale. Nothing
Excellent.
happens. And that kind of peace of mind, especially in your later years, is extremely important.
That's excellent.